So before we get to the charts on C3.ai, let's look at an article from the Motley Fool. Why is C3.ai stock climbing again this week? So the stock is up over 300% because it has the AI in its name. Its ticker symbol is AI. It indicates the sentiment of the broader market in AI. Let's take, for example, earnings from Oracle that occurred this past week. And they said that they had strong cloud sales thanks to generative AI. As a result, that helped boost C3.ai stock up roughly 25% for the week. Now, the news from Oracle comes at a time where major cloud infrastructure businesses are seeing growth slow. So investors seem to believe that AI was the difference maker in Oracle's strong numbers. Again, as a result, C3.ai rose on the news, even though it's not directly exposed to that particular type of demand. While the company did recently release a generative AI product it calls Enterprise Search. Most of its revenue comes from pre-built AI applications for tasks like demand forecasting. Pretty slick, C3.ai. Investors should also remember that C3.ai currently isn't seeing any meaningful lift from AI demand, as its revenue was flat in the most recent quarter, and the company continues to report wide losses. Nevertheless, the CEO, Thomas Siebel, struck an upbeat tone in the recent report, saying the company has seen a surge in customer interest in its product. While that shows that C3.ai is at least moving in the right direction, the stock has become pricey after these yearly gains. Currently, the stock trades at a price to sales ratio of 18, a level generally reserved for high growth software stocks rather than those expecting just 15% growth. C3.ai could eventually catch the wave in artificial intelligence, but at this point, the stock looks best avoided. Now, what are some other reasons potentially to avoid the stock? All these indicators under the profile, under market beat, is in the red. You can see insiders sold $7 million worth of shares last quarter. Short interest is, almost 36%. That might be the reason why the stock is rising at a crazy trajectory. Let's go to the earnings. They're not making any money. Let's go to the income statement. They're actually making less money on the operating revenue side. It's been actually decreasing cumulative over the last 5 years. Insider trades. Let's see what's going on here. All right, so not too bad. The selling occurred back in 2021. Short interest. Wow. So the number of shares that are short has just increased. So the short sellers are thinking that at some point the stock has to go down, right? Based on the fundamentals, but also based on what services or misleading services C3.ai offers. So let's go to the chart. And we'll start with the weekly chart. And we can see that, let's see what this is. We can see that on this candle here, May 30th, price did pierce the weekly sellers level, but did not close above it. However, it did close above this level this week. more than likely due to the Oracle earnings report. Now I did have a target at $45, as that was where we had basing that eventually took out the pivot low, which led to the next leg down all the way from $52 to $12. All right, let's go down to the daily chart, and I'm going to take this off the charts now, as this level is no longer valid. I believe that was the level right there. You can see in recent weeks we've had a volume surge. Again, anything AI related is being bought up. You can see price right now is respecting this upward trend line on the daily chart. Let's take this off. So where's Monday? So this is the Monday candle, and it has risen roughly $9 for the week before selling off on Friday, where it closed at 44.49. So where's price heading next? Well, depends on who's going to remain in charge. Is it I'll say the retail investors, or is it the smart money who's short the stock? From a technical standpoint, $36 would be a good level to see price come down to. Again, if you're bullish, to potentially go long. It should come down anyway to test the upward trend line on the daily chart, as price is overextended. So when price gets overextended, it pulls back before potentially the next impulse move higher. Now let's look at how far can it go if the bulls remain in charge. All right, here's the next target, which was support, now serves as resistance. And that wouldn't be too far off from current price. That's only another $12 higher. And based on how C3.ai has been moving, we could see that get there next week. Nevertheless, if you got in down at the $17 level, the chart suggests it's time to take some off the table if you haven't done so already. Let's call this $36. If you're trying to get into the stock, we got decent volume on this candle out. So you had a rally in price, some basic candles, and a rally out. This was the origin of the leg higher that took out this pivot high. So this would be potentially a good level to go long to get to the resistance support band at $55, $56. Thanks for watching. Subscribe, please like the video.